In the Forex market, we have three major sessions, but have you ever wondered, in these sessions, what currency pairs are going to work best? Which pairs are going to have more liquidity? How are currencies correlated in different sessions? Well, in this episode, we will explain all the answers that are crucial to know to succeed in the trading career.
Recommended broker is Longhorn FX. It's an ECN broker dedicated to delivering a superior trading experience to traders.
Forex market, we have 7 major currency pairs. The major currency pairs are some of the most actively traded pairs in the world, making them relatively low spread than all other minor pairs. And because of the low spread, traders have more interest in trading these pairs. Also, we have 3 major sessions in the market. First one is Asian session. In the Asian session, what you were going to find is that we have Japanese yen, we had the Australian dollar to New Zealand dollar, and some movements in gold as well. This is important to understand which pairs will have more liquidity and are easier to trade in the sessions. So if someone wants to trade pound dollar in the Asian session, would that make any sense? The answer is no. The British pound and US dollar trades are extremely limited in Asian session, so we will have no liquidity in movements, which we would like to see when we place trades, so we need to look at the pairs that being actively traded in these sessions. Another important point is how currencies are correlated in different sessions. If you look at the dollar yen, euro yen, and pound yen in Asian session, you will notice that they all move in the same direction. The reason is that in all of these pairs, only yen is the currency that being actively traded in the Asian session, so their movement is influenced by yens only. But if you look at the Aussie dollar, you'll notice that it may not move as the other 3 moves during the Asian session, and the reason is that both AUD and JPY are being actively traded, so now you have a fight between 2 currencies. So here comes an important point: when you're looking for the trades, choose a pair that is influenced only by one active currency in that session. Like pound yen, euro yen, and dollar yen in Asian session. So the next session that we have is the London session. In this session, we have pound, euro, franc, and gold that are being actively traded, so the same concept applies in the London session. Another important thing is that currencies have both strengths and weaknesses. For example, if you want to trade euro pound in London session, you have to make sure that one pair is weak and another is strong, because that's the only way euro pound will move. But if both currencies are strong, there is a high chance that the market will consolidate and be hard to trade. The last major session that we have is going to be the New York. So in the New York session, US dollar, Canadian dollar, pound, euro, franc, and gold are being actively traded. Now you should have known the answer to the questions we mentioned at the beginning of the video, but let's have them one more time. What currency pairs are going to work best? Which pairs are going to have more liquidity? How are currencies correlated in different sessions? The pairs will work best that have a lot of liquidity in one direction in the sessions. For example, GJ has a lot of liquidity in London and New York sessions and is also influenced by pound only. The correlation of pairs depends on the currencies that being actively traded in the sessions. For example, pound yen and USD yen are highly correlated in Asian sessions, because the yen is being actively traded, so the yen influences their movements. So guys, that's it for this video.